profitable future for Robinhood? That's the latest call from JMP Securities. It's a Citizens company that says Hood's new management is setting the company up for long-term growth. Let's bring in someone behind that call, the Director of Financial Technology Research, Devin Ryan over at JMP. Devin, you know, this is a tough one, right? Because the stock has done so terribly. What makes you think that now it's going to turn a corner?
Good morning, Julie. Well, first off, I think they're taking the market's criticism to heart, and they're taking action. So, people were pushing back that this company can't be profitable. And what we talked about, following earnings and some time with management, is I think they're actually already profitable real time right now. So if you just take the revenues they did in the second quarter, that's about $320 million. They're going to get $60 million a quarter from the last two Fed hikes. Now you're at $380 million. And you probably have another $60 million plus from the upcoming Fed hikes, which gets you well into the $400 million revenue range before you even talk about any of the new products they're launching or have launched. To get to break even after these expense initiatives, they just need to do about $360 million in revenue. So if you do the math we just went through, you're at well over $400 million, which puts them into profitability in real time here. And I think that is a big thing the market's been pushing back on, not just Robinhood, but all fintechs. Robinhood has gotten there. That's one piece. And the other piece is just, this is the year where they're investing in new products and services. And a lot of those, they don't come into revenues on day one, but that's the future of the company. If you believe in the stock, you have to believe they're going to have success beyond just trading. And so this is going to be a record year of new product launches. And there's a lot more coming in the back half of the year.
Devin, let's talk intangibles here. When you met with the CFO and you talked to management there, do they sound like they get it? Do they sound like they are a company that recently had 2 large rounds of layoffs, that they're not going to change the world?
Yeah, I think they get it. And I think that's part of what the layoffs are. Unfortunately, or fortunately, they have to get tighter on expenses because the market is pushing companies to be profitable. But the other thing I think is really critical to distinguish here is if you go back to the first half of last year when you had the meme mania and all the activity in trading, that wasn't a normal level of activity. What we're seeing in the back half of last year and early this year, talking about record high inflation, recessionary environment, this also isn't a normal level of activity on the other side of the coin. And so I think that the pendulum will come back to the middle. We've covered the space for 20 years, and you have extremes happen here, but this isn't normal right now. So they have to manage through a market that's really tough. But now they have an all-weather expense model. I don't think people give them credit. And then the other piece is net interest income, which we talked about some of the revenues coming through. That's going to be about a third of revenues next year in our model. And so it's a much more durable business than just transactional. And as they get the new products coming in, that's going to move the needle as well.
What of the new products do you believe would be kind of the biggest tailwind or even the biggest catalyst for some of the net customer deposit growth to actually move higher?
Yeah. So, well, first off, I want to hit one point on deposits. They're growing their deposits, meaning customers putting cash on the platform at over 20% annualized. So even though transactional activity is down, that's the key metric we look at, that people are still sticking to their plans, putting money on the platform. In terms of products, the retirement accounts coming in the back half of this year. They're going to be in Europe later this year when they close Ziglu on the crypto side, and that will open up a lot of new doors. The crypto side of the business is just, there's so many things to talk about, but the non-custodial wallet, which I think is going to be very differentiated. They have over 1 million people on the wait list. And the cash card, they have a really interesting offering. I think they need to market that more to get the word out. But I would say that's also a big, massive addressable market that they're going after. And so those are a few of the things. But even if you look at their transactional business, active traders on the option side, where you see a lot of active traders in the market and some of the other firms we cover, they don't charge that per contract fee like all their peers. So everyone makes payment for order flow and options, but most other firms charge per contract fee. Robinhood doesn't. What they need to do is offer more advanced features for those active traders, and that's something they're focused on. And the last piece that's going to help revenues here is on the crypto side. They've renegotiated their share with market makers, and they added new market makers to the platform, but they've more than tripled their economics on crypto trading, which means that on the same volumes, or even a heck of a lot less, they'll generate more revenues on crypto trading. So there's a lot of things going on here. I think people are kind of shooting first and asking questions later on the stock, but there's good momentum, and I think they're profitable probably as of the end of this quarter into future quarters, which is a big deal.
And all of that are things that they can control in terms of product introduction, right? Then there's the intangibles that they can't control. And one of those is the meme stock phenomenon when we had the huge wave that helped Robinhood a lot, and then it sort of faded away, which didn't do them any favors. We seem to be seeing some flashes of a resurgence of that. I mean, how important is that for Robinhood? How much can you sort of count on that when you're looking at potential profitability for this company?
Yeah, it's a great question, Julie. I mean, I think ultimately you just need it to kind of stabilize. So again, last year wasn't normal. This isn't normal. This market, you think about institutional investors. It's hard to make decisions in a world where some people are calling for another 15% decline in equity. Some people think we've bottomed and are going up. And so how aggressive do you want to be deploying capital into that really uncertain moment? And that's the same thing with retail investors. Inevitably, we're going to get more clarity on the macro. The markets will stabilize, volatility will come down, and that will help transactional activity. I think that we are bottoming. The third quarter seasonally, summer months is a little bit slower for trading normally. We may see that a little bit here, but I think we are bottoming. And when normal comes back, which we think it will, whether it's over the next couple quarters or even into early next year, we think revenues will snap back, but it's not necessary. Again, the cost cuts they made, even if you see a little bit of decline in transactional activity from here, the net interest income piece that we just talked about, another $120 million a quarter in revenues, far more than make up for that. And so that's kind of the news that came out of second quarter earnings and why we think both revenues and earnings have bottomed, but also we see a pretty good future here for the stock.
Devin, we'll see. Thanks so much. Interesting call here. JMP Securities, a Citizens Company Director of Financial Technology Research. Always good to catch up with you, Devin.
Thanks, guys.